This podcast is brought to you by Kyoto Japan Automotive Group, a company which I've known personally for over 20 years, and your one-stop shop for tyres, batteries and auto parts. Visit their website at www.kyotojap.com for more details. When I first came to this country over 40 years ago, a phrase I often heard used by the Swiss that I met, and other foreigners too, was Switzerland is overbanked. Well, as many of you know, many banks have disappeared since then, thanks to consolidation, thanks to acquisition, thanks to withdrawal from the market, and other reasons as well. And yet we still hear that it can and will go further. And I'm referring to a reduction in the number of banks here. Now, not being in any way knowledgeable of the financial sector except through what I read in the news and listen to from those better informed than me, I'm naturally curious about many whats and whys about the Swiss financial marketplace. And though I already know enough to realise that there are complex reasons and even more complex answers, I'm sure that many of you listening will share my curiosity too. And that's why I've devoted my show today to the financial sector, in particular banking, Swiss banking. My guest is Frédéric Lelièvre. He's the CEO and editor-in-chief of l'AGFI, the leading financial newspaper in the Suisse romande. That's the French-speaking part of Switzerland. And we're recording this on the 17th of April, just before Easter, in his office near Lausanne. Now, why am I telling you the date? Well, because the pace of change these days seems to be growing ever faster and faster. If you're in the financial sector professionally and read and speak French, you will certainly know l'AGFI as both a physical newspaper and a digital one that is available online. Frédéric's journalistic career is full of variety and marked by quality and high standards. He's very well thought of by his peers. And previously, he was deputy editor-in-chief of CNN Money Switzerland in Zurich. He worked for a while as an independent correspondent in Hong Kong. And I first met him when, between 2008 and 2014, he was head of the business and finance section of Le Temps. That's the leading general newspaper in the French-speaking part of Switzerland. And believe it or not, listeners, he even interviewed me once on a topic which might surprise you. And if you're interested, see if you can find the article on Google. He was co-recipient of the highly regarded Jean Demure Prize in 2013 for the book Crack Machine. In English, that's The Crash Machine: How High-Frequency Traders Threaten to Bring Down the Stock Market. I'm going to ask him if it's available in English. Now, Frédéric holds a master's degree in economics from Sciences Po, one of the Grandes Écoles in France. He also studied in Cork in Ireland, which suggests to me that as well as knowing his stuff about financial markets, he also knows a thing or two about Guinness. But we shall find out. Welcome to the McKay Interview, Frédéric. Thanks for inviting me to your office. This time is long overdue for me to repay your interview a compliment to me all those years ago. Frédéric.
Hello, Michael. I do enjoy Irish stout. Rather than a Guinness, I'd go for a Beamish, brewed in Cork, of course, but it's hard to find on the continent. But in any case, welcome to l'AGFI, Michael, and it's thank you very much for your interest.
It's good to be here. I hear that there's a shortage of Guinness. God knows who's drinking it, because I could never stand the stuff, Frédéric.
I love it. You get used to it.
Yes. Frédéric, here we are, not so far from Lausanne, with only half an hour or so to talk about a huge subject. So let's keep to a fairly narrow band of topics about the Swiss financial sector, which interests me, which I know interests you, and which affect many of our listeners, even if unwittingly. And I'll start with regulation, or more precisely, over-regulation. Despite their much vaunted reputation for prudence and caution, my rather daring question to you, Frédéric, is can we trust Swiss bankers, or do we need to regulate them more? And the question at the back of my mind is that we now live in an economy where the banking sector is dominated by one large institution, namely UBS, which certainly was not the case when I came to live here in 1984. How did that happen, and did regulation play a part in bringing this recent situation about?
That's a big question, Michael. Can you trust Swiss banks? I would say absolutely yes, you can, as a rule. But like many rules, it suffers exceptions. The latest being Credit Suisse, and to some extent, I think all banks should be able to go bankrupt. That's the way the free market economy works, and so it can happen. But obviously, it is what we would like to happen. And in the case of Credit Suisse, I believe it has nothing to do with the way regulation was designed. But I would say it has the collapse go back to two main reasons. One is not regulation, but the way regulation was implemented. But that's not the first reason. The first reason is very basic, Michael. It's bad management. It's wrong decisions, wrong people at the wrong position in the bank. So it starts at the very top. The shareholders, they are the one in charge, and they vote and they elect the board members, and then those people elect the CEO and or pick the CEO and build the team to run the bank.
So you're saying culpability goes all the way down?
Of course,
yeah.
and you see it in the stock price. If we have trust in the company, the stock price can go up. And in the case of Credit Suisse, it was going down and down and down because confidence was going away. And shareholders, the board members, couldn't fix that very issue. So being the strategy and the way the strategy was executed. So that's it's very basic. Bad decision, bad business decisions, sanctions from the market. End of the story. A very sad end, and it was a very long story, more than 100 years of history in Switzerland.
That's my second question to you, because I came here, as I said, in 1984, and I remember it was known in Zug as the Schweizerische Kreditanstalt, SCA, and an institution at the heart for many Swiss, for generations.
It has Swiss in its name.
Absolutely. So I'm really surprised to hear what you just told me now. So what you're saying is it failed essentially because it was managed badly.
They took too many risks, and at some point, if you lose too much money, the sanction is there. You have to go bankrupt, and there were many alarms, ringing bells, and that they could have shifted, taken other directions. And in particular, during the financial crisis in 2008, the Swiss Confederation had to rescue not Credit Suisse but UBS, and both banks had taken too much risk in the US, and they were caught in that financial crisis. Credit Suisse managed to escape from any public support. They were close to it, but they found other supports in Qatar, with Qatar Investments in particular, and maybe that gave them too much confidence.
So the Gulf was very helpful as a shareholder in the rescue,
and they came to the rescue of the bank, and many banks were caught in that in that financial crisis, and then they kept on doing businesses which were highly volatile, investment banking, for instance, that you can make a lot of money, but you can also lose a lot of money. The business in Switzerland itself was quite sound and profitable for many years, and it was filling the gap digged by the activities.
And when you say that, do you mean private banking or the Swiss domestic banking?
The Swiss domestic banking, which actually comprised, or it was it was a bank which was doing anything on the market, from retail banking, wealth management, asset management, investment banking, anything you could think of. In the money market, it was everywhere. It was
a universal bank.
Exactly, a global bank. Too big to fail. That's part of the definition. They can do anything. That's why it's so important that they don't fail. But eventually it happened. And so, first reason, back to your question, the first reason was bad management decisions. I think it's quite clear. It's a pity that we can't do much about it now, that it's gone. But then there's also the responsibility from the supervisors. So it's in Switzerland, it's called FINMA. It's the SEC from Switzerland.
This is the regulator.
The regulator. And it's been quite clear that they've been too soft on Credit Suisse. Why have they been too soft? That begs the question.
Yes. And the answer to that is?
I think it's still an open question. The different investigations for me haven't cleared that completely. The picture needs to be should be clear. The Swiss government was involved also in the way the FINMA was dealing with the bank. The Swiss National Bank, the lender of last resort, was also involved. And to give you a precise example, when I believe it was too late, but so the bank collapsed or was taken over officially. The announcement was in 2023 on March the 19th. It's a Sunday. Maybe you were watching TV on the Sunday evening at something like 7 or 8 p.m. when you had the president of the Confederation, Alain Berset, and ministers coming, and UBS and Credit Suisse management team coming and announcing this mega deal. But few days earlier, on a Wednesday at night, around 8 p.m. plus, there was a very strange, I would say, release from the FINMA and the SNB, telling, the Swiss National Bank, basically telling, well, there's been some volatility on the market, and maybe we need to have in this context in mind. Early 2023, we had in March, at the beginning of that month, we had a few banks collapsing in the US. There was the Silicon Valley Bank,
I remember,
for instance.
Yeah.
Over a weekend, basic bank run. People wanted to quickly get their cash out of the bank, and it used to be you used to have to line up
to run on the bank.
Yes, but with the app you can do 24/7.
Yeah,
and it took those banks, a few banks down, and it created some volatility, and market started to get concerned about other weak banks, and clearly Credit Suisse was already in a very serious situation. So the volatility increased on Credit Suisse, and authorities became very nervous. And on that, there's many episodes during that sad story, but it's quite telling. On that Wednesday evening, March the 15th, late at night, which is very unusual for the FINMA and the SNB to communicate, they issued a press release saying, well, there's a lot of volatility. We have this in mind. We're controlling the situation. But Credit Suisse meets all the capital and liquidity requirements that we impose. So it's fine. Well, if actually they need some cash, some liquidity, we're ready to provide the bank with it. But it's fine. And a few minutes after this press release was issued, the SNB, Credit Suisse asked for up to 50 billion Swiss francs. So clearly there was a mismatch between that press release telling us it's all fine by Credit Suisse, but actually we're ready to give them right away 50 billion. I think it was just actually the time that the authorities were buying until the weekend, and obviously during the weekend find a solution. And the solution was UBS to take it over, and the communication was not. It was not, in my point of view, credible. I often make the parallel with when the Swiss National Bank said there was this floor between the euro and the Swiss franc, and we had the board of the Swiss National Bank. At that time, it was chaired by Philipp Hildebrand, who knew very well the market from the inside, and telling everyone, eye in the eye, don't try to defy the SNB. We'll fight for that floor against the euro at 120, and it succeeded. But the communication was very convincing. Whereas that awkward press release on March the 15th, 2023, almost said to everyone, well, that's the end of Credit Suisse. And I think that's one of the many examples we could have that regulation was part of the problem and not the solution.
So it doesn't really square well with the reputation that the Swiss bankers have for being prudent and cautious, from what you're telling me.
No, absolutely not. Yeah. And Credit Suisse was very much, the culture at the bank was very risk-taking, and it was paying for the management, because whatever they do, they got their bonuses, and shareholders were called to bring more capital. The market was not working. The sanction coming from the market was not there, and they could keep on going for many times, and Credit Suisse was caught in so many scandals that should not have happened.
Let us change tack a little bit. and ask you a different question about banking, even though I'm no expert on this kind of topic. I and most of our listeners will not really be familiar with Basel III, but have heard of maybe Basel III. But I know that to professionals in the financial sector it's very important. And explain to me and others who are not regular readers of your newspaper or the Financial Times or the Wall Street Journal why this is the case. Why is Basel III important? Why does Basel III matter, Frédéric?
Well, for our listeners, maybe just to explain what Basel regulation is, it's really linked with the city, the Swiss city Basel. That's because that's the headquarter of the BIS, the Bank for International Settlements, and it's the nickname is it's the central bank of the central banks.
Yeah,
and Basel, we're speaking about Basel III, so there was Basel II, there was Basel I before that, and it started this kind of regulation, international regulation, started at the end of the 1980s. And it developed, and to learn from the previous financial crisis that we tried to prevent another one from happening again. And the very basic idea is that banks are required to have enough capital, enough buffer, so that if they are caught in a storm, they can face the storm.
So to absorb the shock or deal with the change of the wind.
And then it can be very complex in the way you design those requirements. And you have the banks has activities which are more risky than others. And mortgage, for instance, can be a low risk activity, depending on the conditions, and you have more risky activities when you lend to companies or distressed companies, for instance. So you need different level of capital depending on what kind of activity that the bank runs. And Basel III, the issue with the Swiss Financial Center is that Basel III, and actually the last layer of Basel III, not going into too many details, which actually are not relevant for the discussion, is it's an international rule, and it's really important to have the so-called level playing field, the same one for everyone. And a year ago, the EU started to think that, well, maybe this last phase of Basel III, we can postpone it. It will help the economy running better and give more time for the banks. London had the same thinking, and we're going to push it back. The US, it was clear that with Donald Trump, maybe we have time to discuss the tariffs, but Donald Trump coming most likely to the White House, he would put a brake on regulation, and so that would be postponed, if not cancelled. But in Switzerland, it went just well on track, as on a train, almost always on time. We said we would do it. We would say we would have to come into force on January the 1st, 2025. Let's not change, and let's not consider that it's maybe we're putting our banks and the larger one under more pressure than other banks. So there's a disadvantage that the Swiss authorities have put on the financial market without really debating on what was going on. It was more just a civil servant. Okay, we've decided, so we just do it, and we don't have a political view on what's happening. And I think it's quite telling of the lack of strategy that the Switzerland has for its financial center. If we could deviate from just the Credit Suisse case, we only have one large bank left. Are we happy with it? It was the solution 2 years ago. Now the discussion turned out it's more UBS bashing, as I call it. It becomes a problem, and we're becoming maybe too much risk averse, because we tend to forget that at the very core of the banking business is risk taking. Lending money to other people with other people's money, you take risks. You can't avoid risks. So you can limit the risk, but you can't avoid it. And having Switzerland and also at the federal level and the governmental level, not really thinking, well, do we put in place the right conditions for our financial sector to thrive? It's the leading one in wealth management, but for how long? other places are moving this. Singapore, there's Hong Kong, there's the US, London is still around. Dubai, exactly, Dubai, rising one. So, and we don't have that strategic view. It's not. I'm not calling to say. I'm not saying we should not have any banking regulation, not at all. But it's just let's move it accordingly, or following what the others are doing.
Okay, let me just remind any of the listeners just tuning in halfway through that my guest today is Frédéric Lelièvre, CEO and Editor-in-Chief of L'Agifie. That's the leading financial newspaper in the French-speaking part of Switzerland. And we're talking about the Swiss banking setup. Let's just go back to the central banks and the Swiss National Bank, Frédéric. I looked on the internet for some complimentary quotations about central banks and central banks, and I couldn't find any. And most were unflattering. Was I looking in the wrong place, I asked myself. But obviously, we need central banks, or else they would not exist. As central banks and the management thereof go, and you've touched on this already, what's your opinion of how the Swiss National Bank performs? I mean, how does it stack up against, say, the way the City of London organises itself and the way the Federal Reserve in America is managed and regulated?
You can assess the SNB, the Swiss National Bank, with its goal, and it has only one goal, which is price stability. In the US, it has two goals. It has price stability and employment, economic activity. So it has to manage between those two goals.
Is there a reason for that difference? It's historical?
Well, I think it's in Europe. We've been very much focused on price stability, learning from the many crises, hyperinflation period.
The wars.
We had. So that's why it's so important, and it's also part of the influence from Germany. The Bundesbank is very much, and ECB now is very much price stability focused, whereas the US are more pragmatic. And they would balance, okay, maybe we'll have more inflation, but as long as we have a low employment rate, we're happy with this. Whereas, so you can assess the SNB, is it doing well or badly? Clearly, there's no more inflation in Switzerland. So there's a very strong price stability, and we can thank them for them. And on this, they've been doing a very good job. There's no argument to me on this. There's more an argument on how capable they are when there's a huge financial crisis, such as the collapse of Credit Suisse. Are they well equipped to manage this kind of situation? And I explain why I have some doubts about this. But the tricky thing for the SNB today is not that we don't have the inflation rate. Latest figure is 0.3%, so it's almost zero.
Nothing, yeah.
But that's the issue actually, because it goes back again to very close to zero, and maybe then negative prices, which is not price stability either. We'd like to have prices between, let's say, 0 and 2%. That's the definition the Swiss National Bank follows. It's a reasonable inflation, but it's a negative inflation. It's very bad for the economy as well. If you think a price everyone has in mind, it's the salary. If the salaries start to go down, I don't think everyone will be very happy about it. So that's the concern of today of the Swiss National Bank. And why is it so low? Because they've been very much helped by the strength of the Swiss franc.
Oh, I was going to say, because we have to address that the Swiss franc, for all sorts of reasons, seems to get stronger and stronger.
Mm-hmm. And many good reasons, actually. Good reasons because the country is well managed overall, even though we had this big crisis with Credit Suisse, but overall this fiscal stability, the debt is under control of the federal government. Also at the cantonal level, it's quite reasonable, in particular if you compare it to other neighboring countries or the US or Japan or many others. So that's one core reason why there's a lot of confidence in the Swiss franc. And then it also depends on what's happening outside of Switzerland. And I mentioned the tariff earlier. Clearly, if the dollar weakens,
let's come on to that at the end.
When the US dollar weakens, it means we can buy cheap oil. Many
because the dollar is the intermediary.
Exactly. So it helps bringing down the inflation. And today the SNB is focused on, let's try not to have deflation, so negative prices, and most likely we'll go for a negative interest rate again, which we had not so long ago.
I remember.
Reasons.
Yes, I remember. So generally speaking, you would give the SNB a pretty reasonable score on that.
Yes.
Okay.
Yeah.
Obviously, there are always difficult things to be done, especially when managing a national economy, as opposed to, let's say, managing the household budget, even though there are difficult things to be done in that. And in our relatively small but rich country of Switzerland, what do you see as the difficult decisions ahead for the Swiss banking and financial sector, and why are these decisions that are to come difficult? Tell us what circumstance will be required internally in Switzerland and externally to ease that difficulty.
There are many challenges, even though at the moment, it's true you referred in your introduction to the diminishing number of banks in Switzerland, but overall employment is good. Also, the assets under management are also growing, and it's true that you need larger banks today because there are larger costs, and IT or new technologies requires scale, and so it makes sense to have less banks today, but larger. When I talked about what strategy do we have for the Swiss financial center, it's true that if it's unclear how much where the Swiss government wants the wealth management industry to go. I'm not saying that there should be a policy to say you have to do this or that, but let's put all the right conditions in place so you can develop your business. And one condition, for instance, is access to talent, a pool of talent. And if we don't have a good relationship with the EU, clearly it's more difficult to attract good talents, which will provide good services for the clients. Then there's the neutrality of Switzerland, which is clearly one of the core assets of the country, but also of the financial center. And it's been put into questions since the war in Ukraine. Switzerland over a weekend decided to apply the sanctions decided by the US and the EU, slightly differently, not just a copy-paste, but close. And it triggered many reactions outside, I've been told, outside of Switzerland from clients from Asia, from the Middle East or other parts of the world. Is my money safe in Switzerland if over a weekend the government can decide that there will be frozen assets as well? And it's been maybe not well communicated, or maybe the Swiss government could have found other ways to make sure that. I think it's impossible not to do anything if we take the case of the war Russia launched on Ukraine. Switzerland had to do something, or at least make sure that Switzerland does not become a hub to avoid international sanctions.
Exactly.
So that's clear. But putting sanctions in place, maybe the way it's been designed or communicated was not optimal. It was difficult to make that call, clearly. But
it's a difficult line for Switzerland to walk. Absolutely,
and that line is still there. And if one day Donald Trump reaches an agreement with Vladimir Putin and there's let's say a ceasefire, and the US argues, well, we've reached, as we can imagine how Donald Trump would put this, we've reached a terrific agreement with Vladimir Putin. I'm lifting all the sanctions we've put on Russian assets. But the EU says, well, from the EU perspective, it's just a ceasefire. It's not the end of the war. It's not peace yet. So we need to keep pressure on Russia. So we stick to our sanctions. What will Switzerland decide to do?
So we have to say, watch this space.
Yes.
Yeah. But we're coming to the end of our time, but it would be remiss of us, here we are at Easter 2025, not to talk about the immediate happenings in the financial sector regarding tariffs. And I just wondered, but particularly from your vantage point as the editor of a very important financial newspaper in this part of Switzerland, what you think the impact of Donald Trump's tariffs on Switzerland will be. How do you see the situation?
Potentially the impact is enormous for one very simple reason. Switzerland is a prosperous country because it's connected to the rest of the world, export, belongs to the World Trade Organization, which means it relies on a rule of law system. And overnight, Donald Trump, the US president, destroyed this order and said, I don't care, I'm part of the WTO, I will impose tariff on any country the way I like. And when you're in a small country like Switzerland, what can you do about it when you have the largest nation deciding like this? It puts Switzerland in a very difficult situation. Now, in reality, to be pragmatic, so we've been the first sanctions, so-called reciprocal sanctions of 31%, have been put on hold. It's only 10%.
90
now.
days, I think.
Yes, 90 days. So we'll see what the Swiss government can achieve during that period. If it's only 10%, there's two good news. 10%, it's the same amount as the rest of the world. So we're not disadvantaged compared to other countries.
It's a level playing field.
It's a level playing field.
Higher
exactly.
Yeah. And
for many goods, there's room to adapt, and maybe the strength of the Swiss franc is a larger concern than just the tariffs, because the Swiss franc, I believe, since the start of the year against the dollar is maybe 7 or 8% up. So it's maybe it will be the same, even higher at the end of this year. So the exchange rate is clearly a concern, and companies have to work with it and improve their efficiency and have high-end products. That's the only way they can survive.
Frédéric, you've enlightened me. I can now read the financial pages with more insights than before. I thank you for that and for answering all my questions. My guest today has been Frédéric Lelièvre, CEO and Editor-in-Chief of La Jiffy, the leading financial newspaper in the French-speaking part of Switzerland. Thanks for listening to the McKay Interview podcast, brought to you by Kyoto Japan Automotive Group, a company which I've known personally for over 20 years, and your one-stop shop for tyres, batteries and auto parts. Visit their website at www.kyotojap.com for more details. And you can find more podcasts on Anchor FM. Just Google McKay Interview Anchor FM. Thanks again for listening.